Welcome to Video 10 in the Money Education Financial Statement Preparation and Analysis Software Instructional Video Series. Previous videos in the series provided guidance on how to get started using the software and data entry to build the base case. This video will review how to make recommendations on the Assets and Savings tab and on the Estates tab. When you first log into the software, the first page you come to is the Manage Cases page. You can select an existing case or create a new case. I'm going to select the case that we've been working in and making recommendations in the past several videos. You can see that the recommendations that we have made on the Insurance tab and the Expenses and Liabilities tab have been saved, and some of them have fed through to the Assets and Savings tab. Now we want to take a look at how to add a recommendation for additional savings. Let's say we want Mr. Client to start saving $10,000 per year in his 401k, and the company will match 3% of that salary dollar for dollar. On the Assets and Savings tab, I will create a new record, selecting Investment Assets for Retirement. We are creating an employee deferral account in a 401k with the client as the sole owner. The current asset value is 0, and we can fill in our recommended savings amount of $10,000 for the client, select the client's salary, and then add the employer contribution as a percentage of income at 3%. Also being sure to select the client's salary so that the correct percentage of income is calculated. And then we can save the recommendation. As usual, we then see the recommendation show up in gold on the right side of the screen. If we go to the Reports tab and we look at the current year income statement with recommendations, we can now see the client's $10,000 of savings showing up on the income statement, along with the original $2,000 of savings that was to the brokerage account. Notice that the employer match does not show up here because this is a list of the client's payment, not the company's payment. If we switch to the current year balance sheet with recommendations, we now see the account listed but with a $0 balance since contributions don't occur until the end of the year. If we look at the balance sheet 1 year from now, what we will see is both the client's $10,000 and the employer's $1,200 match has hit the account. Note that there is no earnings yet because contributions are made at the end of each year. Now if we go and look at the ratios and recommendations for the current year with recommendations, and we go to page 2, we can see in the retirement savings ratio both the employer contribution of $1,200 and the employee's contribution of $10,000. If we scroll down to the overall savings rate, we see that it includes both the employee and employer contribution to the 401k plus the $2,000 to the brokerage account that was added when we created the base case. Finally, we can go to the Estates tab and we can check the boxes for the estate planning recommendations that we want to make. Most clients will need at least the first 3 items, a will, advanced medical directive, and durable power of attorney for both the client and the spouse. Let's say there's nothing in the case to indicate that these clients need any other estate planning documents, so we will then save those recommendations. This concludes our review of making recommendations on the Assets and Savings tab as well as the Estate tab. In the next video in the series, we will review the income statement and balance sheet with recommendations.